This is your market recap for March 7th, 2025. As you can see today, we played bearish and then bullish. Right, so we ended up closing with a super low volume day. We did take out these two internal sell side liquidity. Today, or I guess on Friday, we had non-farm payroll come out at 8:30, but then Chairman Powell spoke at 12:30, so that kind of threw a wrench in the entire trading day, in my opinion. But as you can see, give me a sec. London session was playing bullish, and then we reversed. So that tells me that if this were not Friday, we'd see a bearish day. However, since it is Friday, we should expect a 20 to 30% retrace of the weekly range, which are these two yellow lines here. Now, in my opinion, you can see here we hit it around 8. Actually, let's go down to the 15-minute for this. 8:30 news, so non-farm payroll came out and spiked up. But in my opinion, news spikes don't really carry the same amount of power that just a regular one does, like a regular price swing. So this sweep here and this spike into the 20% doesn't count really, because I mean, price maybe spent 2 minutes up there, not enough time for people to accumulate orders. So 9:30 came, and we once again spiked up, touched the 20%, and will probably be able to see it on a lower time frame. But price comes up here and then immediately reverses, as you can see during this macro. We validate this 15-minute fair value gap right here. Right? Well, there's no point in naming it. We validate it right here. Right, this gap between these two. Validate it with this. Boom, up. Actually, wow. I don't know if I'd count that as a validation, but it works because if you look, this candle, 1045, comes up, taps it, and then goes down. Right, so it does get that inverse reaction in the end of the day. This is news. Sorry, I don't know what's going on today. That's not news. That's lunch. This right here is lunch. So as you can see, for the majority of the day of AM session, we are bearish. So lunch reverses that, and we come up to close around 20% at the end of the day. Now in the 5-minute, you can see that market opens, immediately spikes up to this 10 o'clock area, right, to this macro. We hit that and then immediately start playing bearish, just like London session would have told us to play in the first place. So we displace lower, validate this fair value gap right here with this candle here, right? We close in it, reject up, and then break through it, come back up to it with this wick of this candle right here, which is also coincidentally in a 5-minute bearish fair value gap right there. So we hit that, continue lower. We take out this low, continue lower, come up, retrace. Again, during the macro, the macro is roughly here. You'll see it better on a 1-minute time frame. But the macro's here, and then we extend lower to hit and take out. Let's see if we can find them. These are really high time frame things. Oh, now we're on Dow. Back to NQ. Yeah, these lows here. Can't even see that far. So, at least not on the 15-minute. But they're internal. They're internal lows, so it's not like a daily low or anything like that. It's one of these types. So that looks to be our sell side target. We hit that. Lunch obviously reverses, targeting this high, and since we took out this high, and we're in the 20 to 30% range, that's the market's like that's its goal, right? Is to close at this 20 to 30%. So we hit that, and then we kind of just play horizontal until time comes. So on the 1 minute, there was a trade that I found. I didn't take it because of obviously non-farm payroll being today and Powell speaking at 12. But I did see this as it was happening. So I saw one macro hit this 20%, right? Reversed. One validation here, right? So this confirms the bearish move. And then we'd enter off of this fair value gap here. Our stop would have to account for the rest of this to be filled. I would have put my stop slightly above the 75% of this fair value gap. And then because it was NFP and Powell, I wouldn't have been looking for a large play. So just a simple this, right? There would be no profits. There'd be no nothing. Just a simple entry here, stop loss, take profit there. Not going to touch it, right? It did continue lower, as you can see. But for the most part, that is good enough. Let's check out this macro here. So we come down here, retrace. I'm not sure. Oh, yeah, we took out this low, explored a little lower, and then retraced, closing within this fair value gap here. And if we look at the whole move, equilibrium is right here. So we spike up above equilibrium, again to this 15-minute inverse. During the macro, we hit this. Boom. This is validated as a fair value gap right here, which means that once we break below it, I'm looking at it as an inverse, right? I don't believe we have an SMT, but we're just going to act like we don't because I don't really want to check right now. But if there was an SMT, this would 100% be a sell right there. Now, if that wasn't the case, this would be a confirmation, and the next array we'd find would be this order block right here. All right, change in the state of delivery. We're going bearish, and this bullish candle is the change in state of delivery. As you can see, we close down here, come back up to it, boom, there's your entry. This would be there. Stop could either go constant encroachment of this wick, or if you're careful, it could even go constant encroachment of this wick over here or this one. But for simplicity, we're just going to throw it here because it's the closest one. Targeting these lows, and if you found them, these lows or these lows. Again, lunch happened. We hit that. Boom. Again, macro right there. Low of the whole entire AM session move during the macro. Played bullish. No arrays for us to play off of. No arrays for us to play off of during the macro. Yeah, I really don't see much here. There's a lot of big wicks. Powell's speaking around here, so I wouldn't have wanted to do anything anyways. I believe he spoke at 12:30. Let's see. Yesterday, he spoke at 11:30. My bad. So he spoke here. Obviously, he didn't say anything because market didn't go anywhere. So this actually could have been a tradable time, but it obviously looks like nothing happened. We have this fair value up here, starting this bullish move up. Don't take out this high with this one, but we retrace again during the macros when this retrace happens. Boom, there. You could play down here, close. This is a rejection, but that's not filled as an inverse. This one could be played as an inverse. So there could be one, right? Array one. Change the state of delivery is here, but you would have gotten screwed. Oops, sorry. Screwed with that because of simply the time. If PM session is going to continue it needs to take out, there's likely to take out a internal sell side, so you wouldn't really want to enter 15 minutes before when there's internal down here. So that's just how I feel about it. We're missing a candle here. Not sure why. But as you can see, we play bullish until we hit this 20%, and then 25, even if you just look in the middle of these two. It's roughly here, and then, price just plays horizontal from there. So overall, Thursday and Friday were tradable in my opinion. The probability was lower. In the future, I probably will trade them just because of how I saw the markets this week, Thursday and Friday, and how they actually played out was very, very close to what I was expecting. But when I do trade on those days, I will do like minimum leverage, right? I'm going to be trading with the least amount that I would risk. So yeah, higher time frame. I kind of want to see us take out this low down here, right, all the way down there. That's where I want to see us go. Do I think this could be enough to retrace? Yes. Again, that's equilibrium. But it all depends on how we play. We could reverse here, but if higher time frame, we're seeking a big correction because this leg here has been kind of uninterrupted, just like this one was. Might be some time for a larger retrace. Now, I'm not saying I want one, but I'm saying it would make sense. I can play the markets either way. If the markets tank, I make more money, other people lose money. Fine by me. But all I really need is London session to tell me how to trade and the power of 3 for the week to tell me what to expect. So, all this to say, it could continue downwards, and I'm okay with that. But it could also stop going down in reverse. But what I will not do is pick the low. I'm not going to try to say this is as low as it's going to go, and I'm only going to play bullish from there. No, I'm going to play bearish until it proves to me that it's going to play bullish. Because the best way to trade is to react. You can have ideas and predictions in your head of what the market will do so that you have a plan set up for if that stuff does happen, so you react faster. But at the end of the day, we're all just reacting to what the market's giving us. Like, I can't enter without an array, which is a reaction, right? I can't predict to the exact minute when I'm going to enter. I can't do that. It's very rare to be able to do that. So we're predicting, but the main thing that we're doing is reacting. So, all that to say, we'll see what the market gives us to work with in the future. So yeah, this has been your market review for March 7th, 2025.